Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get started today on this Thursday, September 18th, 2014. Markets are higher today, up basically trading at yesterday's highs. And again, if you remember yesterday, we had that big pop on the Federal Reserve FOMC statement. And again, that was taking us up to the double top high. And if I zoom out on this chart, I want to show you this. All right, so again, your high from yesterday pierced this high going back to, I think it was right around September 3rd, September 4th. And then we sold right back off to the downside once we hit that double top. Now today, we opened higher, pushed up into that same level, and actually went slightly higher before stalling out. And what this is telling me is the markets are basically saying, okay, we heard from the Fed, we know their stance, and we're going to be right here at the highs of the market. To go higher, we need another catalyst. What could that catalyst be? Well, obviously today the referendum vote in Scotland is going on currently, and that, in my opinion, is what the markets are looking for. They're looking for either a yes or a no vote on that. If Scotland does not break away from the UK, I believe the markets will see a little bit more upside tomorrow. If they do, then you could see a sharp sell-off. Why would a sharp sell-off come if Scotland becomes independent or votes for independence? The answer is very simple, because there's major issues in the debt markets because of it and the currency markets. All right, think about this. Scotland has a lot of debt, right? Well, they're right now part of the UK, so that's on the UK's plate. If they break away, well, what happens then? Does Scotland take that debt over? How does Scotland repay it? They don't even have a central bank. They don't have a monetary system. They don't have currency. I mean, there's a lot of issues here that could be an issue. So from the financial markets perspective, they want the vote to go down as a no to the referendum on independence. Now, if it is a yes, well, obviously we'll see some selling. If it's a no, you should see the markets pop back up a little bit. How much upside is left in this market? Very minimal. And you could see that from today. I mean, the Fed came out yesterday and gave us pretty much what we were asking for in terms of the markets wanting. The market spiked up a little bit, came right back in. Today we're trading up at those highs, but we're not really going higher. All right, if you were 2 months ago, 4 months ago, 6 months ago, the markets ripped higher on the Federal Reserve's non-action commentary, their dovish nature, and we're not seeing that. So again, you're starting to see kind of the beginning of the end. In my opinion, you're still seeing this kind of, and it doesn't mean we can't go a little bit higher, but for the most part, it's the beginning of the end, in my opinion. And again, we'll see that start to play through more and more over the coming weeks and months. Okay. Right now, S&P's up 8, Dow's up 89, NASDAQ's up 28 points, and again, we are seeing the Dow at new all-time highs. Let me just take a look at the Qs, the QQQ trading right around the highs as well, and if we go to the daily chart on the Qs, you're not quite at that high yet. And again, you can see right here, here's your high and here's your daily chart, so you're just underneath that level for now. All right, if we go to the DIA is at higher highs, and again, you can see right here, here's your former pivot, there was your consolidation, here's your breakup. All right, so again, you are at all-time highs on the DIA, which is the Dow Jones Industrial Average Tracking ETF. The spiders right now, you're just right at those highs piercing as I showed you on the intraday. This is the daily chart with all my day trading as well as swing trading levels on it. Again, just passing that along. Now, I did take profits on a swing trade in the research center today, and again, the profits keep coming. Almost every day, we're having a 7 to 10% winner there, and again, you can't beat that. And the trade was NUS. I bought this yesterday right here. This is where we picked it up, literally right in here, folks, with the research center, and no sooner did we buy it than it raced higher, and we took profits today. I think a 7.2% gain on this in one trading day. From yesterday to today, 7.2% in our pockets. Congratulations to Research Center members. Now, if you want to get involved in this, take the 7-day free trial to the Research Center at InTheMoneyStocks.com. That's InTheMoneyStocks.com. And again, the Research Center is what you want. That is for swing traders as well as investors. Okay. Going to a couple other things here. Take a look at Apple today, up 42 cents. Apple's really gone to sleep here. And again, if you go back to the spiders on an intraday basis, take a look at this, guys. Look at how small the candles are. I mean, look at these tiny candles down here. They're almost non-existent. And that's because at this point, the markets are just really waiting for that referendum vote to come out. I mean, which way is it going to go? We should know something by 9 p.m. tonight or a little after 9 p.m. Eastern time. But again, you won't know the final calculations probably until tomorrow morning. That's my guess, especially if it's that close. Okay. Baidu, I think it's worth mentioning Baidu having a monster day today, up $8, 3.65%. This is catching the Alibaba buzz. And again, that's a beautiful move. And if you take a look at Weibo today, up about 2.6% off its highs, that's also catching a little bit of buzz from Alibaba. Alibaba will debut tomorrow. All right, and generally, in the history, if you look at history, especially in 2007, big IPOs have marked generally the top on markets. The hype leading into it, that has been a major top signal. And again, you can look back to 2007 BX. BX in 2007 when it came public. And let me see if I can bring up the monthly chart on this. All right. Yeah, look at this. So back in mid to late 2007, BX debuted, and look at the chart and look at the markets. If we go back to the spiders on the monthly chart from 2007, here it is, and look at the markets. So that was basically back then. I don't know how many of you remember that, but back then that was like the IPO of all IPOs. I mean, it was just so hyped out there, and sure enough, it literally collapsed as soon as, well, the markets collapsed, started collapsing or put in a top as soon as that thing debuted. So just kind of cool to understand that, folks. Goldman Sachs, JPM, very, very strong again today. You have to kind of tip your cap to these guys. I think they are getting into that extended ratio. If we go to the daily chart here and I zoom out a little bit, let me just see. I don't see any short-term levels. Let me go to the larger time frame. And yeah, I mean, really what you're looking at here, you have a pivot. Oh, it pierced that pivot, and then you have another pivot right here. So you're actually coming into some significant support, resistance on Goldman Sachs. But Goldman's had a great run. You have to tip your cap to it. And again, JPM is not far off either. JPM is actually coming into double top right here. A nice little area of resistance there as well. Okay, so that's what we have going on that. One stock to note here, you have U.S. Steel. And again, let me go to the daily chart. U.S. Steel had a big gap up yesterday, kind of made a little bit of a potential topping doji. My guess is U.S. Steel is in a topping pattern right now. And the reason I say that is not because of the doji. I mean, doji's on the daily pot. Definitely a potential signal there, but it's more this. So see how you had this sell-off here on the intraday, and then this bearish. This is a bearish pattern formation. You actually have a micro bull here, but again, as long as this high doesn't get taken out, you have a bearish inside bar pattern that could yield some selling. So we'll see again. And again, a lot will be determined, I would say, by the referendum vote that we'll get word on, late tonight and so forth. Couple interesting little factors here I want to point out. You got some pretty significant reversals on gold and silver. So yesterday we saw gold collapse to the downside, and we saw some continuation selling this morning, and then a big reversal. And look at this flag pattern. This is a bullish pattern of consolidation. All right, so again, I don't know yet, but you're getting close to the potential of a signal for upside on gold as well as silver. If we go to the SLV, take a look at this, guys. Same thing. So you had this sell-off here, and look at this big pop and now consolidation. Bull flag consolidation off of a reversal. What I'm looking for is to see this come back up and take out. You could connect these highs here. That would be significant. So essentially, if you get above 1790 to 95 on a closing basis in the next day or so, I would say that's a signal that the metals, gold and silver, will be going long. And I also think you'll get a big move tomorrow. Depending on the referendum vote, you could get a big move on the metals as well. Gold and silver primarily, obviously. Okay, what else do we have to look at here? I think that's about it for now. Just looking at a lot of green on the screen. Markets, again, are kind of holding steady here. I'm not seeing too much. You can see a little bit of a downdraft here, but there's just no volume, so I really don't expect much selling unless we get some sort of preliminary word on which way the vote's going to go. And then if it was going as a yes vote with a high percentage chance of succeeding, then you'd probably see a little bit of weakness in the market going into tonight. But aside from that, just expect sideways action. Volume should be light the rest of the day, and then tomorrow should get some fireworks one way or the other, folks. One way or the other, some fireworks coming up. Take care.